we continue to talk about post-pandemic changes, be it the changes in consumer trend, changes in, domestic and international travel, what the workplace of the post-pandemic future looks like. Which of these changes will be sticking, and how do you invest around these trends?
Yeah, look, we're in the early days. I mean, we're 2 or 3 months into these trends, and I guess that's a big part of the sort of the skill in the job is picking what's going to resonate over the long term. And I think as we see, from market to market, whether it's in education or healthcare or work from home, what the future doesn't look like what it was pre-pandemic. It doesn't look like what it was during the pandemic, and really, there's an opportunity for amazing founders to sort of reimagine market after market in terms of taking the best of how things operated pre-pandemic, but also taking the learnings of a pretty amazing experiment over the last few months where businesses and consumers, governments have been forced to adopt new measures very, very quickly.
So you guys have just completed another successful funding round with support from 2 major Australian super funds. What are you going to be targeting that cash at in terms of these early stage companies that you see as being beneficiaries of these dislocations or the big changes, thematic changes that we talk about?
Yeah, look, for us, there's a geographic lens which continues to be the same as what it was, which is Australia is obviously an incredibly important market for us. Southeast Asia and Israel are the other 2 markets where we have operations and invest really, really significantly. Healthcare has been an important theme for us the last few years, and probably, if anything, it will be an increasingly important theme. We recently closed an investment in the last 6 or 8 weeks in Doctor Anywhere, which is a telehealth business in Southeast Asia. Other investments in that theme. Fintech has been an important theme for us the last few years. SaaS marketplaces. So it'll continue to be areas where we've invested significantly, but really feeling that this will be a pretty important period from an innovation perspective, because of the opportunity to really reimagine each of these markets and think about how services and products can be offered going forward.
Paul, how does this crisis right now with the pandemic compare to, say, past dot-com bust or the global financial crisis?
Yeah, look, and every crisis is obviously different. We try to learn from previous experiences, but we also know that these are all very, very different individuals. Obviously, in this case, we've got awful health implications, which is impacting so many people around the world, as well as the economic implications. I think the big difference here, the dot-com crash, for example, was about, at least in the perception of a lot of investors' minds, was about the complete overhyping and failure of the internet. Whilst really, I guess, what we're seeing in terms of the technology and investing implications of the pandemic is that we're really, really accelerating the shift from traditional ways of doing things to online. The great theme of the last 25 years has been everything moving to the internet, the digitisation of everything. And, if we use US e-commerce sales, for example, they took a decade to go from 5% in 2009 to 16% in 2019, and then they took 2 months to go up a further 11% from 16% to 27%. So we've just seen this massive acceleration in terms of these online trends, and that's been the major difference of this crisis compared to previous crises.
So as you go through this pandemic, is the way that you assess these new companies that you want to back, are your criteria also changing along the way?
No, I think the thing about the crisis over the last few months is it's given us the opportunity to see our founders in our portfolio and how they respond and how they react in a crisis. And I guess that gives us an additional lens as we think about new founders that we're meeting and opportunities that companies to invest in. Resilience is an incredibly important attribute for founders. Agility is an incredibly important attribute of founders. And those things are probably even more important today than they ever have been.
Well, your valuations at this point are on paper, right? So how do you feel about approaching exits for investments, and what's the time frame that you're looking at?
Yeah, for us, I mean, we typically invest at a sort of Series A, Series B stage as sort of first check. We want to continue backing companies through the life cycle. But from that first check, the period in which we're going to hold companies is going to be typically sort of 6, 7, 8 years, sometimes longer, occasionally shorter. For us, of course, if we've invested in an incredible company and we think about an Airwallex or a Canva, really we'd prefer a longer hold period rather than a shorter hold period because we want that compounding effect over as long a period of time as we possibly can. But 6, 7, 8 years is, for say, a Series A investment would be a typical expectation. Obviously, times to IPO have increased in the last 2 or 3 or 4 years. We may see that come back in the next few years. I think there's been a perception from public market investors that a lot of the growth has already occurred when these companies come to the market publicly. And so we may see companies coming to market a little bit earlier than they have been in the last 2 or 3 years. And we may see companies becoming profitable perhaps a little bit quicker than they have been over the last few years.
Paul, do you see the environment, the policy environment, state and federal level, supportive for innovation in Australia?
Look, on the whole, I think a couple of things. One is, in terms of Australia specifically, we feel we're moving in the right direction. The formation of really amazing companies, say compared to 5 years ago or 10 years ago, in terms of early stage high growth companies, is probably at a rate of 3 to 4 times faster. So a lot more incredible founders, a lot more of our best and brightest are attracted to starting companies. We think government can play a role in facilitating and creating a platform. We don't want to overstate the role. We think governments at the moment are very, very alive to the opportunity, and we're really keen. We've had good engagement with both state and federal governments over the last few months about policies that can further accelerate and see Australia produce more world-class companies. Because we know problems are being solved today globally, not locally.
Sorry, Paul, just very quickly, I understand you guys weren't involved in the last Canva raise. Why not?
Oh, look, we were really, really lucky to have invested in the company in its first 2 rounds in sort of 2012, 2014, and really privileged to have the opportunity to back an amazing company at its formation. We haven't participated in the last couple of rounds, and they're continuing to progress incredibly well. And so it's an amazing company, one of the great success stories coming out of Australia in the last few years, and really excited to continue to watch it grow. And they've had great support from funds like Sequoia China and Blackbird, and hopefully that will continue over the next few years.